Hello, trader nerds. Welcome in. Those of you who are back from a long 3-day holiday, and those of you that had to work right through it. We had a great MLK Day yesterday, had a great parade. All the bands were there. It was really nice. So then just a day of coming home and just chilling around the fire. And now all the kids are out here because it's so cold. That's why I'm wearing a jacket today. It is chilly, but we didn't get any snow. Wow, what's happening in the market? We got a crash going on. Cancel, crash, cancel, crash. Market is down 0.4%. That's a great day to start another tranche of a Black Swan hedge. Now, remember, we normally like to start, if you're going to buy them, we like to start them, when the market's up, but the market has been up. What's our volume today? I don't even see our volume over here. What's my number here? 6933 or so? I don't know. Why is it not showing my volume? There it is, 5477. So we got average volume. Looks kind of range bound to me, doesn't it, you? From the overnight low to the overnight high. Now we're going back down to the overnight low. So, this may look a little bunchy here, but these numbers, these lines sometimes mean something. So overnight high, overnight low. We're going back down to the low now. So we should be, if you're, it looks like the alligator's eating, baby. If you're scalping, scalp short, go low, go short, go short. We're going down. Everything's showing going down. So we shall see. Anyway, it is what it is. Let's look at the big green monster. And hello, big green monster. How are you? So we are, hold on a minute. That's the weekly chart. Started to say something looked really, really funky there. Here we go. Here's our big green monster. Where's my dadgum? Oh, that's not it either. Hold on. Got the wrong charts here. Let's see. Volume profile. Here we go. There we go. Volume profile. Yep. So do we see? This is the point of control. That's a magnet. We do see some little gaps here, maybe a magnet, but it looks like we're just inside the fair value zone. So we are fairly priced. And let's see what the expected range is for this week. It was a little bullish. Expected move for this week is a little bullish compared to last week. Here's where we were last week. We blew that out. So now we're here about the 48.38 on SPX to 47.29. So we are within that expected range. All is well. Let's look at our 200 daily moving average. 200 daily moving average, we are above it. That means we still continue to be bullish. And this is the one I messed up a while ago. Like my weekly, make sure this is right. Weekly 10 is above the weekly 20, which means we continue to be bullish as well. And you can always look at something similar to the 200 daily moving average is the 10 monthly moving average. So we're well above the 10 monthly moving average. Cool, baby. Cool. So it is risk on as always. Let me pause some of y'all. Let's see, mute some of y'all. I'm hearing some stuff. All right, there we go. So everything looks really, really good. Again, with risk on, I can use up to 50% of my buying power. So we're looking good. Now, the account we're going to look at today is the only account that does not have a Black Swan hedge in it, and that's the Roth IRA. So let's look at our Roth IRA and let's see how we're doing today. So we'll go over here. Roth IRA does not have a hedge in it, and it's at 32.54. 32.54. So let's go put it in 32.54. So we're down just a little bit from the last time we did this, which was a week ago. So we're 24. So we're down. We're up 0.61%, and the market is at negative 0.09%. So we are kicking the market. So in this one today, let's look and see if we've got any trades that need to be managed. Looks like everything is fine. Nothing looks bad there. Then you need to go over here and look at your naked puts and see if anything is at 95% or more, right? So if something is at 95% or waka, take them off, baby. So we do see that we have the 3500s here that are, and remember, at about 30 days left, that's when they become 95% profitable. So let's take those off. You want to? Just mechanically. Let's close the 3500s. Buy those at 85 cents. We're going to be a little greedy and see if we can get them off at 80. Come on, baby. There we go. So we served the 3,500s at 80. So let's go put those in. 3,500s at 80 day or 80 cents. Here those are. So we'll close those at 0.80. Isn't that great? Even on a down day of 0.4%, we are able to take profits. I just love that. Let's see if we got Applebee's money, y'all. Let's see if I might can take the kids over to Carrollton, Georgia, do a little Applebee's. Let's see. We made, oh my God, why is my thing not working? Oh, we made $156. Rock up. Come on, baby. I mean, that's good money. That's good money. So we had another one over here, didn't we? That said it was 65 or 95% profitable. Yeah, we got these 3450s. Let's take them off. Take them off. They have done their job. So we'll try them at 70. Come on, baby. Come on. Come on, little kitty. Nothing. Jack swap credit. All right, here we go. Cancel. It's up to 75. There we go. Now we might have enough money to go to Longhorn, y'all. Let's see. We close those 3450s. Let's see, 3450s at 75. Okay. So that puts us 116.24. That means that we made another 126. So that's what, 270 at 282. There you go. Now that's the Longhorn, baby. That is Longhorn. You can keep your nasty what is that? Olive Garden. Well, Olive Garden is like going to the frozen section of the Piggly Wiggly and getting some Italian food in there and putting it in the microwave for 3 minutes. That's what it tastes like to me. It's just nasty. All right. So let's go and look at our greats and ratios now. So we should have pared those down nicely. So now we took risk off, and now let's look at the greats and ratios. So let's take our groups off so we can see. And now we've got 31, 32. 31, 32. Sorry about that dog, y'all. 31, 32. Oh, yeah, right where we needed to be, even with and what is VIX? Still at 12 or so. And our buying power usage is $10,900. Hey, will y'all shut that door so that dog will shut up? Yeah, there we go. 36%. All right. So what we're going to do, y'all, is we're going to do a black swan hedge. I'm going to go back to calling it Sweet Bobby Hedge just because it pisses people off. Let's go back to calling it the Sweet Bobby Hedge. Don't you? I like that. Sweet Bobby Hedge. So let's go Sweet Bobby Hedge and see if we can do one in this account. So the first thing you do to do a Sweet Bobby Hedge, remember you go to ES. That's where we like to put it. And let's see if we can go to ES. And let's buy some options. Because I'm going to buy first and then sell secondly. So then we go to about 120 days. Here we go, 120 days. And then we're looking to sell some for $3 right in here, right? And then you want to buy some that are a little cheaper. So let's do this. Let's do, where do I want to put them? Let's do these. Let's buy. Now, is this right? This is a smaller account. Am I going to buy this? I'm trying to think, am I going to do this big time like I normally do it with the 4 tranches? Shoot, I think I am. Let's do it. Let's buy 20 of these. Buy 20 of these. We're going to try to play 305. There we go. There we go. There we go. So then big old daddy's going to come over here and I'm going to sell me 12. 8, 9, 10, 11, 12. Look at that, y'all. We're going to try to get as much as we can. We're going to try to get 3 1/4. And it ain't going to let us. But that doesn't hurt from trying, y'all. You always got to try. Try. Hey, daddy's in a session, if y'all don't mind. Jeez. Just because they're out of school. There we go. So now we've got our black swan hedge in. So let's go look at our Sweet Bobby hedge. I'm sorry, I should have called it Sweet Bobby hedge. So let's go over here and let's look at our Analyze tab and see what this gives us. So here's ES. And we want to see. Can y'all close that door for that dog barking? Unbelievable. So let's go hide simulations because we got a lot of simulations. So this should be our 1220 now. So it looks like, hey man, if we get a 20% crash, we're going to be up 90. What's today? Yeah, we're $9,800. But if you put in the volatility of that, it's going to be so much better. So let's see what that looks like. It's going to be volatility, and we just move our vol steps up. And I generally move this to 10. So see this, y'all, if we crash, we crash. Sweet Bobby is going to be in the Dominican Republic with a little umbrella drink in my hand, right? Or I may be in Costa Rica. So if it goes down 20%, this is going to mean we're going to be up $86,000. Praise the Lord. But that's just the hedge. That's just the hedge. What about with all my other positions? So then you go down here and you go uh, hide simulations, of course. Instead of single symbol, you're going to change this to portfolio weighted. And then you're going to say, wait a minute, it says nothing. And the reason is we've got those daggone T-bills that are messing us up. So you got to take off the T-bills. So let's take off all the T-bills and the money market accounts and all that. There we go. There we go. So now let's see what we got here. Look at there, y'all. We got something, don't we? Now we've got, says the P&L at 20% down would be down $11,000. But if you pop in the volatility, y'all, we might be anywhere from up $10,000 to $20,000. That is a perfectly hedged account to the downside. Now, problem is, here's the problem. Now, we've got to trust Mr. What's his name that tried to sue me for, showing everybody this trade. But I won't even mention his name, but we've got to assume that the negative theta that we are incurring is fake. Remember him saying that? Hey, trust me on this. That's what he said. He said, trust me. The theta in these longer dated, far out of the money options, the negative theta is fake. So we are not paying for the privilege of holding on to these hedges. Okay, so we'll just have to keep that in mind that our theta is going to show a little bit low. Now, immediately after you do this, you want to start your next tranche. Okay, everybody, you want to start your next tranche of these, but there's nothing really to do until we have another really good down day, and then we'll start selling some against these. But the first thing you want to do is you want to go out here and on those shorts that we sold. So now we've got ES shorts. We've got 12 shorts. You want to say, hey, baby, I want to harvest these. That's what deer hunters say. So they can be around liberals who don't like hunting. They say we harvested a deer. They can't say we shot him right in his darn eyeballs and his tongue was hanging out in the back of our truck because that makes people upset. So you don't say I killed a deer because people don't like the word kill. So you say I harvested a deer. So what we're going to do is we're going to harvest these 12 short puts. They're out at 120 days. When they get to 20 cents, we're going to close them. So I'm going to create a closing order on those shorts. And we're going to do a price of 20 cents. That's when we want to close them. Okay. And then we go from day order to GTC. Boom. All right. Now, as soon as that order fills, which is going to be, several weeks before that fills, then we would immediately go out and sell another at least 3, maybe 6 naked puts to start another tranche of the Black Swan hedge. And then what you would do is after you sell those 3, you put a GTC order in to buy 5 or 10 or however many tranches you do under there so that the overall price is a credit or debit. Isn't that cool? Y'all like this stuff? And it's great. I mean, you sit here and go, man, on this account now, in conjunction with all my other accounts, I am just waiting for the market to crash. Because if the market crashes today, if we go into World War III today, this account, not all my accounts, but this account is perfectly fine. Okay. Any questions on the Sweet Bobby hedge? All right, I will stop the recording. We will just hang out for a minute because I am in my underwear and I am feeling good.